What are the charts telling us about the long bond TLT? And S&P 500 are heading next. In this video, I will look at charts from S&P 500 and TLT to figure out where both of these markets are taking us using technical analysis. It's part of the art of trading that I do. Previously, we triggered the kiss of death signal on the S&P 500. Was that valid still? Are we going to crash another 30% from here? Is TLT ever going to rally? Let me explain. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want it to be real. You want it to be true. You need to be my client, don't you? An overlapping structure, it's not a good sign for price for any market, because it's a sign that this is a corrective rally rather than an impulsive rally. So we have got two kinds of rallies: corrective and impulsive. If it is a corrective rally, which is looking rather likely because of the way it's moving, it could mean a lower low. It could mean that if the next pullback occurs, if the next major decline could potentially push it back, at least a test, a prior low, or indeed lower low. Whenever a structure rallies like this, we have to always look at the structure and the way it's rallying. A lot of people mistakenly think that all rallies, all uptrends are the same. They are not. In fact, let me explain to you. Let me go on this chart you are seeing here on this particular charting structure. Now notice I am showing you two different patterns. By the way, I explained this to you, that we need to be very careful when a market is going up, but with lots of overlaps. As you can see here on this structure you're seeing here. What I mean by overlap, you might ask? Here it is. When the market is going up like this, pay attention to the corrective waves. Look at the downward moving waves. For example, this one and this one. Now notice all these corrective pullbacks. They are all moving the same price ranges as one another. In other words, they are merging in the same territory. So for example, this particular decline here was moving in the same price channel as this previous decline here. Okay, that's an overlap. The same happened over here. Notice this decline here moved in the same price channel as this previous wave. In other words, they overlapped. As you can see here, the same happened over here. This decline here went in the price range of the previous decline, as this one did here, as this one did here, as this one did here, and so on and so on. Now if you look on the right-hand side, notice you will see something different. This structure did not have an overlap. Specifically, I am talking about these declines here. Notice this decline, there was no overlap with this one. So you will see that this particular corrective declining structure did not go in the same price channel range as the previous one, okay? Therefore, there is no overlap. So what does this mean? It means that whenever you see a pattern that looks like this, be very careful. Because some people who are not familiar with technical analysis, maybe they have read some books or watched some videos on technical analysis, but the fact is that most textbooks do not even mention this. That not all uptrends look the same. So for example, a textbook or someone out there who's read about technical analysis might think, okay, well, you have an uptrend here, don't we? Because you might say that you have a series of higher highs and higher lows, right? Most textbooks mention this. But here is the problem. What they don't mention is the overlapping structure. As you can see, so again, that's why we need to remember not all uptrends look the same. They are not all equal. For example, this one, notice in this particular structure on the right-hand side. This one, you can see that the higher high, higher low structure, they are not overlapping. This is a very important tool, an important principle to remember. By the way, notice that in this structure on the right-hand side, with 5 waves as well, which again shows to us it's impulsive. So bottom line is, if you have seen overlapping rally, a structure like this is going up, but it's overlapping like this. It's much more likely to be corrective. What does that mean if it's corrective? It means it's much more likely to fail and result another continuation of the downtrend or bear market. Let me just mention this too. There is another kind of structure that you need to be aware of as well, which is this one where you have a 3-wave structure in a rally. So if price goes up, as you can see here in 3 waves, and especially if the 3rd wave here, that's about 100% projection. In other words, if this 3rd wave, let's call it the C wave, if this is about the 100%, or let's say 138.2% projection of the previous A wave, if C wave is equal to 100% or 138.2% of the A wave, then we need to be very careful, because we are probably dealing only with a 3-wave structure, which means it could be corrective. What we need to remember is that a 5-wave structure, an impulsive 5-wave structure, goes way beyond 138.2% extensions. if you see a rally that only goes up to the 100% and the 138.2% extensions and then fails, rolls over, notice again we have an overlap. Therefore, no, we are likely dealing with a corrective structure rally, which means this entire rally was more likely to be an ABC rally, okay? Now that we understood these important principles, for example, about the structure of a wave of a rally, and also about the principle of overlaps and non-overlaps, now we can begin to understand more clearly why this rally here failed, okay? And it's important to point out, I think this will be very useful to you. Next time you see an important rally on any market, stocks or bonds, always look at the structure. If the inflation is going lower, bonds might have rally. We don't know yet if the rally has began or started. It might have, but it might start from a lower levels. As a trader, we don't know for sure just yet from which point TLT is going to start that major rally again. It could be from current levels, but that's not the point of this video. What matters is how it rallies, how it goes up. So for example, if it goes up in something like this in 5 waves that are not overlapping, brilliant, fantastic. If it goes up like overlapping structure or just a 3-wave structure like that, then forget it. No. We are not interested in any of these because those are corrective structures. They are much more risky. They are not dependable. Now I'm going to show you my clients David Vine and Jema's book, Ignite the Passion, Co-Create Your Dreams. Such an amazing book. And my client Teddy Easy's book, Wicked Pussy Perfume. Such an amazing erotic novel. And my book, Time. It is a bestseller. You are such a good boy for watching my video right till the end. Bye.